The Chinese economy is starting to collapse, and this will take a toll on every single aspect of the world. The interconnectedness of today's globalized world is such that if the biggest exporting and importing nation, China, suffers, all other economies will feel the consequences. In this video, we'll discuss what are the main problems facing China, and we will go through several key economic statistics which shows us the true state of their well-being compared with previous historic levels. Stay until the end of the video if you want to understand the major macroeconomic drivers which lead the world's superpowers. Hello everyone and welcome to the Market Watcher, a place for gathering traditional financial and crypto knowledge on a regular basis. Like the video, subscribe to the channel and don't forget to leave a comment down below about which topics you want us to cover next. I read all the comments. Let's first start with the major problem, and this is China's real estate sector. The Chinese housing market concerns emerged at the end of last year with the fallout and near bankruptcy of the largest real estate developer in the world, Evergrande. Evergrande has amassed some $300 billion in debts, which is more than most other sovereign nations. For example, Greece, which is notorious for its debt accumulation, has $381 billion of debt, according to recent Statista.com information. The massive expansion of house and apartment building in China during the last decade has spurred huge debt problems, and at the same time, most of the property built are completely empty and they resemble huge ghost towns with no real inhabitants, hence the term ghost cities was coined. According to information coming from The Guardian, nearly 1/3 of property sales will plunge until the end of 2022. This is a tremendous drop, and this has never been seen before in China. Huge protests threaten the Chinese Communist Party's rule, with millions of people refusing to pay their mortgages. This is forcing the government and banks to take major steps, with the government issuing $30 billion of new public debt in order to help distressed property developers. Also, a huge issue is the decade-long expansion of prepaid housing. In China, it is a common practice to pay for your home before it is built. Often people pay fully for homes which have yet to be even started. This has led to a lot of false offers and scams, with a lot of property developers scheming and using older customers' money to design and buy new land and offer again the same deals to new customers, while at the same time the old and new customers are left in the dust with nothing being built, or at best they are waiting and are left with long overdue contracts and time duration delays. The problems become huge when the housing market turns sour and demand starts to falter. This has already started to happen, and a lot of experts are calling this the biggest housing market bubble in history. The bigger the bubble, the bigger the crash, and subsequently the bigger the economic consequences. Now that we have a brief overview of the problems, let's discuss what the data is telling us. When we see the home price index of China, the average new home price in the 70 major cities dropped by 0.9% year-on-year in July of 2022, according to macroeconomics data. Following a 0.5% decline a month earlier, it was the third straight month of decreases in new home prices and the steepest fall since September of 2015. Here it is important to note that the already started diminished demand for property directly affects China's overall growth. According to data from Goldman Sachs, the property market has a close to 30% share of the entire GDP of China, with other estimates ranging from 23 to 30% to be more precise. This makes the property sector the largest and most important sector for the economy. On the second graph, we see the major slowdown in annual Chinese GDP growth. The target set by the president of China, Xi Jinping, is a 5.5% GDP growth for 2022, and the facts are this is quite impossible at the moment. The GDP growth for Q1 of 2022 was 4.8%, while the second quarter results are an abysmal 0.4% GDP growth, which is even below most consensus analysts' estimates of about a 1% growth during quarter number 2. Here it is very important for us to understand why the lack of growth is a huge political risk for China. The Chinese state is oppressing its citizens in major ways. One cause for accepting these oppressions was the historic and record growth of the Chinese economic strength. As the great Charlie Munger says, what the Chinese did with their economy during the last 40 years is nothing shy of a miracle. And we here at the Market Watcher do not differ much from the opinion of the great Charlie Munger. But we understand that if this one accepting factor vanishes, meaning if the growth of the economy vanishes, then the people of China will have no other incentive to be well behaved, and economic hardships bring with them the largest protests and political disruptions. This is of great threat to the Chinese Communist Party, and they understand this perfectly. This is why they will try to ban all leaked content of protests, they will try and silence the outbreak of government distrust, and all other events may lead to a government takedown. We will follow the situation very closely, so don't forget to subscribe so you won't miss out on our future videos. Other big issues are the high levels of debt. China has one of the highest ever recorded levels of private debt to GDP ratio anywhere in the world, with the current level sitting at the astonishing 184.49%, which is higher compared to the Q1 level of 182.04%. The data stretches back to 1992, when the level was around 80%. When examining public debt to GDP, or also called government debt to GDP, the level is not so high and it currently sits at 77.84% according to data derived from Statista.com. Just for context, anything below a level of 60% is considered relatively stable. Other very important economic factors to look out for are the consumer and business confidence levels. The higher the confidence levels, the higher the likelihood is that citizens and businesses will spend more. And as the great Ray Dalio says, the higher the spending, the higher the economic growth. Less confidence is followed by less spending, which leads to a lesser economic output. Let's first take a look at the consumer confidence levels. And currently, we are at a record low for this indicator, which is telling us that never before has the Chinese consumer felt so distressed and worried about the economic conditions of his country. Even after the great global recession, after the period of 2008 and 2009, the levels had stayed close or above the 100-point level. Currently, China is seeing levels of about 88.90 for July of 2022. This leads to much less consumer spending. And now let's take a look at the business confidence levels. Currently, we see a slower moving downtrend for the business confidence levels, but it is important to note that the drop of business confidence is followed and comes after the consumer confidence has dropped, which is quite logical. First, consumers get worried and stop spending, and only after that businesses get hit and they start to lose their confidence. The lack of consumer spending is already starting to shine if we look at the retail sales levels. Currently, China is experiencing one of the slowest growths in retail sales growth in its entire history. For decades, China has had between a 10 and 20% annual retail sales growth, and since the start of 2022, the growth has dropped to between 2 to 3%, with a big chance in the coming months the growth to go into the negative territory. For the business side of things, the same can be seen when looking at the industrial production. As we all know quite well, China is the production powerhouse of the world. But the data is showing us the production superpower is starting to slow its speed and the steam is running out. Again, for decades, the industrial growth has had a 10 to more than 20% annual growth, while the latest data for July is coming in at 3.8%, which is lower than the analysts' consensus estimates of 4.6%. To end on a semi-good note, the inflation levels in China are one of the lowest in the world, with an inflation rate standing in at 2.7% as of July of 2022, but as most other nations around the world, the inflation level is rising. In our other upcoming videos, we will discuss other Chinese data and economic metrics, as well as we will examine other important macro drivers, which are very important to understand the Chinese economy, which takes an 18.79% share of the whole world economy as stated by Statista. This was the end of our video lecture. Subscribe to the channel, like the video and leave a comment for the algorithm. It greatly helps the channel to grow. Thank you for watching until the end, and I'll see you in the next video.